Even bond yields are calming down. But last hour, Jamie Dimon had a dire warning for the fixed income market. Here's what he said.
You are going to see a crack in the bond market, okay? It is going to happen. And I tell this to my regulators, some of who are in this room, I'm telling you it's going to happen, and you're going to panic. I'm not going to panic. We'll be fine.
I love the conviction. For someone who's been in markets, John Porter, as long as you think you'd have less conviction over time, not more. John is the chief investment officer at Newton Investment Management, and I'm kind of just throwing this at you, but what are your thoughts about what Mr. Dimon just said?
Well, I love his bluntness. You've got to respect that he's not equivocating. He's telling you what he thinks. Look, he's obviously a brilliant business leader, and he has a perspective on markets like few do on this planet. I will say his history is he tends to make brash comments like this, warn of looming geopolitical issues and other major macro issues that we tend to avoid the worst of it more often than not. But you've got to pay attention to the bond market right now. He's absolutely right about that. I think that's what's in control of the market narrative right now, and it's critically important to watch how the bond market unfolds in coming weeks and months.
Well, and I'm glad we played the whole, the comment that he made, because he said, we're going to be ready for it. I'm not going to panic. And you realize this is what a leader has to do, is to actually foresee the 9 crises that could happen and be ready, even if only 1 or 2 of them do.
Oh, absolutely. And I would say respectfully that everybody says they're not going to panic. And then when the reality is in front of them, some of us get a little weak-kneed. His history is certainly he's leaned into to challenges very successfully and continue to make his company stronger through a lot of different macro and micro challenges. But
I don't mean to make it.
There are challenges in front of us.
For sure, it's not just all about him making these comments. It's about the substance of what he said, in which I'd argue maybe that the crack already happened, that it felt that way for the last couple of months. I don't know if it was exactly because of the budget bill or exactly why, some of the international developments with tariffs and so forth. But did you sense that crack? I feel my conviction is that it happened. We kind of went through it. It wasn't that big of a deal. And maybe he's right. Maybe a larger one is coming. And maybe it's not, and we already just lived through it.
I agree with you completely, Kelly. We certainly lived through a bit of a bond market panic from the early days of April to late April. But it subsequently has calmed down. But there's still some challenges to get in front of that we have to navigate in front of us. We're still waiting to see what kind of inflation uptick may happen as a consequence of the tariffs. There's still, although much lower worries today than maybe even just 4 or 5 weeks ago. There's still risk of recession, worries about a looming possibility of a recession. There continues to be large deficits. You mentioned the big bill and the continued need to fund ever-growing deficits. Those are challenges that the bond market is going to have to navigate over the coming weeks and months. I will say, when I look at the market right now, look, investing is about probabilities, and I would say a lot of people are worried about the bond market. In my experience is when a lot of people are worried about something, the challenge tends to come from somewhere else. It's rarely what everyone is focused on, and right now, almost everyone is focused on the bond market.
Yeah, well, I almost would describe your kind of conviction right now as contrarian, although it would be silly when people hear what I'm about to say, but they'll understand why. You love Nvidia, you love Alphabet. You're even interested in China from an investment point of view. So, again, I don't mean to suggest that these are small cap value stocks trading at 4 times forward PE that are hugely out of favor. But what gives you the confidence now that kind of the Mag 7, some of these momentum type of names, AI trades, and China would be the place to be?
Yeah, there's a lot there, and I appreciate being labeled a contrarian. Everyone likes to think that they've got unique or differentiated insights, and the reality is we rarely do. But I do think when I look at Nvidia and Alphabet to start there, those are names, particularly Nvidia, despite what has been stellar performance over the last 3 or 4 years. It's still only trading at sub 30 times next 12 months earnings that are, understated because of some of the challenges with their ability to sell globally, as highlighted in your prior segment. And, the AI trade is only beginning. The implementation, the utilization of AI, I see it at my own company, BNY. We are on our front foot, leading the way in incredibly innovative ways in terms of deploying AI, and it's only starting to impact us in positive ways. So I think the benefits of AI are going to be unprecedented. That it's all still in front of us, and Nvidia is the key supplier of critical chip componentry that underlies that trend, is in an underappreciated investment opportunity.